Welcome to Always Ageless, the show where we talk about being bolder, not older, and where we learn to live life fully at every age. Today, we're talking about something that almost every family worries about eventually. I know from personal experience, but most of us would rather not talk about it until we absolutely have to. What happens when someone needs long term care, and how in the world are we going to pay for it? My guest today has spent years helping thousands of families navigate exactly these situations. Sandy Messer is the founder and CEO of Long Term Assurance in Arizona, although she can help people around the country. So we want to be sure that everyone knows that. Sandy came to senior care after a career in accounting, tax preparation, and estate planning. And today she specializes in helping families understand ways to fund long term care, including veterans benefits, Medicaid planning, and other financial options. Sandy, welcome to Always Ageless. I'm Valerie Van De Zilver, and I'm so glad that you're with us today.
Thank you very much. It's great to be here.
Sandy, before we get into the benefits and the long-term care, I know people want to know a little bit about you. You started in accounting and tax and estate planning. How did you end up devoting your career to helping seniors and their families?
Way back, long time ago, right out of college, I was in accounting and worked with a CPA firm and was doing audit work and tax work and also worked as a paralegal for a while with an attorney, all of which I really loved doing. I was living in Oklahoma and raising my two children and actually met my husband. And he had actually been in the senior care world his entire adult life. He had been a caregiver and eventually started owning assisted living group homes. And as we dated, I was studying to be a CPA, and he said, "You know what? Let's just get married, put the CPA thing on hold, and you come here and help me, and we're going to start a business helping seniors find assisted living and paying for it, etc." And so I picked up my two kids and I moved across the country. Basically, from there, we started working with seniors right away, helping them find the right assisted living. And as you mentioned, number one question you get asked all the time: this is beautiful. This is fabulous. My mom's going to love it. My dad's going to love it. But how on earth am I going to help them pay for it?
Yeah.
And that question just was the key to it all and kind of where I started.
What did you see in that was happening with families that made you realize there was so much need for what you're doing now?
So in when we first started doing, as I mentioned, he had been in the assisted living world and decided that he wanted to start helping people find the appropriate assisted living. And as we were looking, he had the medical background
Oh,
and I was the financial. So, working with those families and having them say to me, I have children that are in high school and going to go to college, and I have my parents that need care, and I'm in the middle still working. How do I manage that? How do I navigate that? How do I not take from my kids what I need to give to them, because that's not what my parents wanted me to do, but on the other hand, they need me too, and they need my time, and they need finances. And we would just spend hours counseling with people and talking with them about what the best way to go was. And it's a little different for every family, but overall there's just some pretty much common similarities amongst everyone. People plan for their retirement. They save money. They look at ways that they can help others and enjoy their life and spend time with their grandkids. And then one of them gets a diagnosis like Alzheimer's or dementia. And they go from planning trips and, trips with the grandkids to Disney World to now suddenly they're looking at placing their loved one, this person that they've spent maybe 50 years with, in some type of care facility. And they don't know how they're going to pay for it. They're not sure what they're going to do, but they're also brokenhearted because they're losing out on that dream that they had. So there's a lot that goes into it. And those are the ones that really touch my heart. And if I can help them find a way to pay for the care so that the options are there for them, and they can enjoy the time with their loved one without having to worry about the finances, at least that's one thing we can do to help them.
after all these years of working with families, what still surprises you?
One of the things that really surprises me is that people maintain their IRAs as if they are the most important thing that they own. and they will spend their cash from their checking, their savings. They'll get reverse mortgages, they'll get HELOCs on their house, but they'll hold that IRA out as the last resort. And from my experience, it really shouldn't be the last resort. The IRA itself, when you have care costs, a lot of those care costs can be a tax deduction on your 1040, and pulling money out of that IRA and using it while you have offsetting care costs makes more sense than spending down all the money that has already been taxed and then leaving the IRA to the last minute. And for most government agencies, that IRA is countable. There are some states IRAs are not countable in for Medicaid, but in some states it is, and for VA it is countable. So hoarding and holding on to that IRA with your last grip is not always the best thing. But a lot of people don't realize if your children inherit your IRA, unless there are very specific provisions on the IRA, they have 5 years to liquidate it at their tax rate. And they don't have offset care costs to kind of offset that taxation.
Right.
So holding on to the IRA is, once you're at a point where you need some care, isn't always the best thing to do.
So let's talk about the phone call that you probably receive all of the time. Mom can't live by herself anymore. We found a place for her, but it's expensive and we don't know how long her money will last.
Right.
I hear about this, Sandy, and I think about it every day, because as we live longer and the statistics say we're going to, how do you plan? Where do you start? What do you say to those people?
A lot of times people are under the misconception that Medicare, which everyone has the opportunity to enroll in at 65, Medicare will pay for long-term care, and it doesn't. So there's really only 4 things that pays for long-term care in the United States. One of them is a long-term care policy that you purchased before you needed the care. Another one might be aid and attendance from the Veterans Administration. A third is Medicaid, which most states offer for aged people that need long-term care. And then lastly, it's your savings. And if you don't have the savings, or you're worried about running out of it, there's not a lot of ways to get more of it once you need to start using it. So one of the things we do in our practice is we offer a free eligibility call. So everybody gets to have a conversation with us, and we go through your unique situation.
So I know that when people are qualifying for home loan, there's things we tell them, don't do this. Definitely don't go buy a new car. Don't do this. So in your situation, before a family starts selling assets, moving money around, or writing enormous checks for care, what do you wish they would do first?
The one thing that they need to know for sure is, until you get someone to sit down with you and go over a plan, create a plan for the future. Don't start selling things. Don't start getting your trust revamped, creating a trust, all of those things, because in each state it's a little different. Federally, it's a little different. And we want to look at your unique situation first before we start changing things. In addition to that, one big thing that we see a lot of people do, and I know they do this from the kindness and love of their heart for their parent, but they often pay for their parents' needs out of their account, even if their parents have money to pay for things. I've actually had situations where children have their paycheck deposited into a bank account that their parents' Social Security goes into, and they both share the same account. And that's not something we want to do. We don't want to commingle money. We want to keep funds separate. Whenever you apply for benefits from a government agency, they are going to look at, for VA, the last 3 years, Medicaid, the last 5 years. And so if you've got a lot of money going in and out of accounts from the adult child to the parent, and maybe there's more than one child doing this, or they're spending their own money and then getting reimbursed from their parents, we just don't want that. Let your parents use the funds that they have to pay for the things they need directly from their account to who they owe the money to. Try not to pay for things for them and then get reimbursed. All that back and forth of money confuses the situation, and we call it commingling, and we don't really want.
So is there a point when, and I would suppose this has happened, when people come to you and you have to say, I really wish you would have come to me 6 months ago?
There are times when I wish that. I rarely say that. A lot of times that's because they just didn't see it coming. They did not see it coming. But if you're in crisis mode, the best thing you can do is keep going forward and get the solution and start working on the problem itself. Do I personally wish they had come to me sooner? Absolutely. There are so many people that we could give them the right direction, good guidance. One of the big things we see a lot of is power of attorney documents that are not very good. And sometimes I've seen power of attorney documents that are 20 years old and they don't have good HIPAA language anymore. So, in a lot of banks, people will tell me, and another big thing is people will say, well, I have medical power of attorney, but I never did get durable financial. And I'm like, medical is great, but it's not always as necessary as the financial. The doctor will listen to the adult child and care about their concerns. The bank won't. The bank has to have it in legal writing that they're allowed to do the things they need to do. So if the parent still has capacity, we can do new documents. We can do new power of attorney documents. If they don't have capacity, we can try to work within the legal system and the banking system to the best of our ability to make it work. But sometimes they have to get conservator guardianship over their parent, and that's a more expensive step. So again, if we can get people to make sure they have good power of attorney documents.
So we have an opposite problem sometimes where people will say, or you may say to them, that they have too much money to qualify.
Mm-hmm.
And something I hear often, and I've heard in our own family, is, well, we don't think our parents are going to qualify because they have a house, they have some savings, and some retirement income. So is that wrong?
On the surface may not be wrong, but it's absolutely where planning is important, because the laws give you the opportunity to plan. The government wants you to plan for long-term care. They don't want you to be caught by surprise because that costs more money for everybody. They would rather you use the law and the tools presented by the law to put the house into an irrevocable trust. So now that it's not a concern, they would rather you use a personal services contract for the care you're providing for your family instead of just, kind of doing it under the table. They want it in writing what's happening so that there's no confusion and we can use the laws, and that the laws are there to be able to protect the family and be able to get things done that need to be done.
Well, when families hear terms, they'll like income limits and asset limits. They sometimes assume that they have to be virtually just penniless before they can receive assistance. Is that true?
No. So for the VA themselves, the VA puts an income cap of 163,000 on how much, it's called a bright line, on how much a applicant can have in their name at the time they apply. Medicaid has different numbers, $2,000 for an applicant, but if they're married, their spouse can retain the assets. There's ways to work that. So you hear these numbers, and they're oftentimes generalizations. It's a generalization to say that the applicant can only have the VA asset bright line. But when you actually get into the applicant's planning, see what they need, see what their care costs are, you may find out that you're ready to apply in a couple of months, and you would have not gone and talked to anyone, and you might have missed out on the opportunity to earn the benefit that the veteran served and worked so hard to have for us.
One of the questions I've had, and I've seen with my clients as well, is that you might not, maybe you have a little bit too much money now in your savings, but you're not going to have very much longer.
Right.
And so what do you do? Because you never know how long that person's going to live.
So it might help to kind of, when I started doing helping families with paying for long-term care, I started out primarily with the VA and became an accredited agent of the Veterans Administration. And I would help my veterans' families get the benefit that they deserve. For example, a single veteran can receive up to $2,424 a month tax-free for the rest of their life as long as they're paying for care. So I would help the veteran get that benefit, but over time, care would increase, like you're talking about. They would go from maybe needing a standby shower assist and help getting dressed to suddenly now they are having difficulty walking, maybe some dementia sets in, and there's some concerns they'll wander. There's just a variety of things. And the assisted living does increase their rates based on care need. Another thing a lot of people don't know is the larger facilities, the apartment style ones, typically have 2 to 6% increases every year, regardless of
Yes.
whether the care goes up. So as that increases, the veterans would come back to me and they would say, hey, mom or dad can't afford to keep paying for care because their care costs have increased to the point where it's in excess of their income, their social security, their VA benefit, maybe a retirement pension. So then I started helping them with Medicaid applications. So it's kind of like a two-step process. We might start with Medicaid if a person has no VA connection, no veteran connection. But if they do, maybe they do eventually get to the point where they need Medicaid. Okay. So we try to sit down and analyze the care need, their income, their assets, and what benefits they can get, and give the family peace of mind that they can have the assurance that they'll be able to pay for care for the long term.
And that's not an easy task to grab a hold of and accomplish. It is very difficult.
It
Um,
is.
Now, are there any legitimate planning options that families may not even know about?
Yeah. So one thing that's very legitimate is the fact that you can plan for your funeral. And that's something that a lot of people don't realize. You can, depending on your state, for Medicaid and for VA, it's $15,000 can go into a funeral plan for yourself, and if you're married, $15,000 for your spouse. And those are funds that are set aside and no longer countable to the government agency that you're working with. At Medicaid, as an example, in Arizona, it's $9,000 that you can put in. So if we have a veteran applying for VA benefits and they would like to do a funeral trust, we always try to look at their state Medicaid number and suggest they don't go above that. And then they set up an irrevocable funeral trust. The children or their estate is the beneficiary. And the way that works is the funds go into the funeral trust. And when they pass, the children can use those funds for the funeral. And if there's any funds that remain, it goes to the estate and is dispersed to the heirs. So it's not lost.
Until I met you, I had never heard of that. So
Yeah.
it definitely is something that I didn't know about and we haven't talked about. So let's talk about that a little bit more. So
Okay.
creating the trust. So do you take money from your own savings to put into that trust, or is
Yeah.
it money you take out of your VA benefits? How do you even start that?
So if you're applying for VA benefits and say you have your bright line right now is 163,699 to be specific, and let's say you have $180,000 in your bank account, you can open an irrevocable funeral trust it's an insurance company that usually sells those, and you put up to 15,000 in there, and suddenly you're down to the 165. You're almost there, ready to apply. And those funds are set aside and held for you for your family until you pass, and then they can use that for your burial. And again, if there's funds left over, the estate gets it back.
And then are those taxable to the estate, or is it just depending on how the trust is set up?
No, I don't believe they are taxable to the estate. And there's only a few companies that do the funeral trusts. You can do funeral plans at a local funeral home, which ties you to that funeral home. If you choose to use a funeral trust, two of the companies that do it, as an example, one would be called Elco and another one is Unity Financial. And both of those, you can go anywhere in the country, which is nice. So let's say you purchase the funeral trust while you're in California and then you move to Florida. The funeral trust follows you. You don't have to be tied to the funeral home in California. The trust can be used anywhere in the country.
I would guess that a lot of people don't know about that.
I don't know that they do. I don't, again, funeral planning is probably not our most exciting thing to do, but it is a tool to kind of lower the assets so you're closer to applying. Another tool is if you have a family member who is living nearby you, even if you're in an assisted living and they're consistently paying your bills, they're consistently taking you to doctor appointments, managing your medications. They can do something called a personal services contract. And that contract is between the senior and this person, and they can pay them through the personal services contract. And that helps them kind of lower income or assets, and it depends on your unique situation, but it is an option that's available. And then if you're doing really advanced planning, an irrevocable trust is a great option. For VA, you've got to do it 3 years in advance, with the exception of the house. The house can be done at a different time. But for cash resources, 3 years. For Medicaid, it's 5 years. And an irrevocable trust that's out of your name protects your assets for yourself for future use with your trustee or family for your family. So it's a great option, a great tool.
Now, Sandy, what is the reason someone would use a personal services contract?
Let's say you, like I said, you've got an adult child who lives nearby and they're doing extra work for you that the care facility does not do. And so, maybe they're doing your banking, paying your bills. It would be no different than hiring a fiduciary to pay your bills. You'd have to pay them so you can pay your child through a personal services contract as well to help you with those things. Lowering income potentially, lowering assets potentially. Again, it kind of depends on your situation. A lot of the things we're talking about today are more broad overviews of options. Each person's specific situation needs to be reviewed with a planner.
And are you one of those planners? Is that something someone can do with you?
Yes, that is kind of what we do in our office. We offer, like I said, a free call, and we go through their situation, discuss what options there are. If it's something outside of our scope, maybe because of the state you live in, we can always get you with an attorney or someone in your state that would be better suited to help you.
And you can help people in any state, at least to start with?
Yes.
All right, great. Good. So let's talk about veterans because that may be one of the most valuable parts of today's conversation. Certainly, it was something I didn't know enough about. And in our situation, and I would suppose this happens with a lot of our listeners and viewers, two things happened. Number one is we didn't realize for a long time that my mom could maybe get something from my dad's VA benefits.
Yes.
And number two is we thought, oh, she's not going to live long enough. And a part of that, Sandy, we thought it was going to take like 2 years to get it approved through VA. And by that time, she certainly wouldn't still be alive. Well, none of that is true in our case, but it may be in someone else's case. So let's talk about the VA aid and attendance, excuse me. Is it something that only starts with a spouse, or can the veteran apply for it while they're still alive?
Mm-hmm. So there's several different levels of the benefit based on the veteran's marital status and if they're alive. So a married veteran, that the veteran him or herself needs care, but they're married, they can receive up to $2,874 a month tax-free. So almost $2,900 tax-free. And when I say these are tax-free, coming from a person who did taxes for years, you don't even put it on a tax return. There's no 1099, nothing. So this is money that's direct deposited on or about the first of every month to help pay for long-term care. There can be a single veteran who needs some care, and we'll talk about what that care looks like in just a minute. A surviving spouse. So in like the case of your mom, where your father's passed, but he was in the military and your mom has some care need, she can qualify. And then, and I had mentioned before, the single veteran is $24 a month. The surviving spouse is $1,558 a month. And then there is an advanced pension. That's a pension where the veteran does not need care, but their spouse does. And they can receive to $1,903 a month tax-free. Basically, the money should go to the applicant, to the veteran or their spouse. It should never go to a third party. And there are some companies out there that might try to do that, and that should not be the case. The money always goes to the applicant. And then they have the ability to decide, do I want to use this in-home care company or this in-home care company? Do I want to go to this assisted living or maybe this memory care? It is completely up to them. They can go anywhere that they can afford and that they would like to go to with those funds.
So let's go through some other myths. For example, one of the things I hear often is that people might, and maybe this is more a Medicaid issue than it is a VA issue, is that people have too many assets. For example, they own a home, or in my parents' case, they own a mobile home, but they still had that asset. Is it possible for people to get benefits while they still own a home?
Yes, and that's true with Medicaid in most states as well. The primary residence is excluded for the most part. The challenge with it is, and where I think the confusion comes in, is if you move into assisted living and you're already getting benefits, you're not likely to keep your house once you're in assisted living, right? You're probably going to sell it or rent it.
Correct.
When you sell it, you don't have a primary residence anymore. You have cash. And when you rent it, you now have more income. So those things have to be considered. But if you're living in your home and you're doing in-home care and you have no intention of leaving your home, The primary residence is excluded.
Okay, so parents live together. The dad was a veteran and they still own a home. Can they apply? Does the dad have to be sick? Can he apply for the benefits anyway?
Good
What?
question. So, in order to qualify for aid and attendance from the VA, you have to have help or assistance with 2 activities of daily living. So
Okay.
that might be walking, transferring, getting help in and out of a chair, a bed, something like that, toileting, bathing, dressing, and then lastly eating. And that's one that can confuse people. Eating is actually putting food in the mouth. It is not meal preparation. You try to think of it as what would a caregiver do versus what like a maid might do.
Okay.
So anytime you have those care needs, if you have 2 of them, even if it's standby, you would then qualify for VA benefits. Interesting though, if you have a diagnosis of dementia from a doctor or neurologist, you only have to have 1 care need.
All
But the
right.
care does have to be there. You do have to have, because it is the aid and attendance of another person. So you have to have some need of care, but they can own their home. Yep.
So is there a limit to the amount of equity they can have in their home?
No, they typically just say the primary residence is excluded. Mind you, it is with Medicaid, they sometimes do look at the equity. VA benefits does not. VA says you can own a primary residence, that's allowed. It's excluded. But again, remember, if you sell it after you've received the benefit, you might lose the benefit because you've come into money now instead of having a primary residence.
If you sell your home at that point, at some point, then do you notify the VA that you did? Is that what happens? Is that how they find out you because you
They
changed your?
often, good question. They often find out through IRS records. That when you do your
Oh,
tax returns and different things like that, you're no longer, they find out you've sold your home. But they request and you say that you're going to let them know. So we usually have our families work with us. We do planning, as I mentioned. Nothing catches us off guard because we make sure they understand exactly what we're doing. A lot of times people don't realize, especially like, for example, if someone is receiving the benefit in assisted living and for some reason they move to another assisted living and they forget to update the VA where they're living. The VA will spot check. And if they call the assisted living that you're supposed to be living at and you're not there anymore, they will drop the pension and not try to find you.
oh, of course,
So, and
of
yes, so
course.
another good reason for them to work with a planner, for example, in my office, if you are working with us and your mom is moving, you just give us a call and we get all the updated forms for the VA and make sure that they are updated exactly on where your mom is at all times so we don't run the risk of losing anything.
Your dad passed away, so they sell their home. But with selling that home, some of that money goes to, let's say they had an arrangement where some of the money goes to their children at that point. And so they have that equity out of their home, but they don't have it all. Is that a consideration?
If it's done legally and correctly, as long as their assets do not exceed $163,699 at the end of the day, they're fine. So, for example, you may have a reverse mortgage on your home. While you may sell your house for $600,000, but your equity that you get from the sale is only $100,000, you're fine.
So it could have happened that you received benefits while you lived in your home, and let's say in California and in a lot of states now, your equity could be five, six, $800,000, and so you received your benefits. But when you sold your home, if you had that cash available, then you could lose that benefit.
Correct. Yes, that is true.
And then in a case where the veteran or the spouse continues to live longer, then would there be a situation where maybe that money's gone because they've spent it on care and now
Mhm.
they need, or they're at that $163,000 limit again where they could apply again?
Absolutely. Yes. Yes. There's nothing that says you can't apply or reapply when you get back down into an approvable state.
Does someone have to have been injured in combat in order to qualify?
No. In fact, in order to qualify for aid and attendance, so there's 2 main benefits the VA pays: aid and attendance and disability. Disability is the one where you're injured during your service. Aid and attendance has wartime periods that you had to serve 1 day and 90 days active duty anywhere in the world. And you didn't even have to see combat. We have many veterans who guarded the Pentagon never left the United States. Were taking pictures of generals and all over the country, but never left the US, and they qualify for aid in attendance because they were serving one day during a period of war. So, as an example, the Korean conflict ended January 31st, 1955. Let's assume that a veteran came into the military on January 30th, 1955, never left the United States, but was at least 90 days active duty, they would qualify.
And I'm curious, I just have to bring this up because I spend a good deal of time visiting assisted living communities and memory care communities. And I'm sure you have, well, I know you have, and you see people have memory boxes outside of their rooms. And this is where people, for our viewers and our listeners, people put things about their background, helps them remember where their door is and wonderful, sweet things. And I'm so fascinated when I see that one of the things that's really important to people is put something there from their military service. And especially women. I heard a story this week of a lady who served. She was in Pearl Harbor and happened to be right there. She wasn't on duty that day, but she was playing out in the yard or something. And her story and how she has something from that in her memory box. And I think that's so touching and so fascinating that that's such an important part of people's lives.
It is. And it's interesting too, because what surprises me, how many don't talk about it. They might they do the memory boxes. That is true in the assisted livings, but oftentimes they don't advertise this incredible service that we are free because of what they did. And that's how I view it. That's part of why I love what I do. I'm able to just really give back to people that make it possible for me to have freedom, make it possible for me to speak English.
Yes, yes. Yes, it is. It's fascinating. And now as those people pass on and we were saying this week in one of our tours that there aren't going to be that many of them around a lot longer from the World War II era. But then we have Vietnam vets, right? We still have some Korean War vets. We still have the Vietnam vets. And now people who've served in Afghanistan and some of those other places. But again, they don't have to be in a place of combat.
Right. One thing that's really interesting is the Persian Gulf conflict started, the exact date was August 2nd, 1990, and it still is not over.
Interesting, isn't it?
Yes. So we are talking about a huge group of men and women who have served their country faithfully, who may need aid in attendance at some point. And it's interesting because a lot of the ones that I see, because I work with aid in attendance, are veterans who had been in the military maybe in the 80s when they wouldn't have qualified for aid in attendance. And then after 9/11, they re-enlisted. And now they do qualify.
Oh, interesting. Interesting. So we've established that the spouses can qualify, but is there anything for the children?
So if a child is disabled before the age of 18, there is, but not if they are completely healthy and there's no issues.
So tell me about that. Let's tell our viewers, our listeners about that just briefly.
So basically, we've had several clients over the years that perhaps the veteran's child had Down syndrome or some type of disability, and they were muscular dystrophy. They were born with that. The VA will help and assist with that. That particular, it's typically not a full benefit, but they do get $600, $700, $800 a month.
Well, that's nice.
Yeah, and it kind of depends. Yeah. I've actually had veterans that we've gotten aid in attendance for, and they've received an additional stipend of $600, $700 a month because their adult child, who has had a disability since before the age of 18, is living with them and a dependent of theirs. So you've got the veteran who has some care need with a child who also has some issues that they can help with.
And does the child continue to receive for their lifetime, or is it the lifetime of the veteran?
It is for their lifetime, but they have to reapply. And that's another really good point you've brought up. A lot of times people don't realize if they submit an application for the veteran and it includes a spouse or perhaps a disabled child, when the veteran passes, the spouse needing care has to reapply. They don't automatically get the benefit.
And then the spouse would be under the aid and attendance limit for the amount.
Right, $15.58 a month, yes.
And is there ever a time, like I think of Social Security, where each spouse has their own Social Security, And when one of them pass away, then that changes. Is on VA, is it always based on the amount of the veteran? There's never just a separate spousal amount during the life of the veteran. Is that correct?
You are correct. There is not. No, it is based on if the veteran is living, it's based on his or her marital status.
And I think, Sandy, one of the things that I continue to hear that people don't know the answer to. So rather than try to guess, I'm going to ask you today. So is there any limits to VA aid and attendance for the spouse, whether they live in their own home or whether they live in assisted living or in memory care?
They can live in any location, the veteran, the spouse, married, single, any location, home, memory care, or assisted living. It's fine. The only challenge is just the calculation of things, not the amount. They still get the same award amount, but the calculation of what is being spent on care. In an assisted living, the rent itself includes care, food, utilities, the room and board, all of that. At home, we can only look at the actual care need of the individual and what they're spending on care. So if they still have a mortgage or they have a utility bill, that's excluded from the calculation. Then we're only looking at what are they spending on care to determine if they get the whole benefit or a portion of it.
All right. So if someone is in assisted living, a spouse, my mom, for example, someone
Yes.
else's parent, if they're in assisted living, they don't disqualify. They're not disqualified because they're in assisted living.
No, not at all.
I wonder why people think that.
I don't know. I don't know. I don't know. They're completely qualified. Independent living with on-site care, assisted living, memory care, in-home care. They can qualify in all those locations for VA benefits.
And to go back and ask a question for clarification purposes, but do the spouse qualify for aid and attendance only if they are unable to do two of the ADLs?
Yes, you are correct. It is the same requirement.
So no matter where they live, if they're unable to do at least two of the activities of daily living, that's what qualifies them for the benefit, not where they live. Is
Correct. Yes, that is true.
that correct? All right. And so for our viewers and our listeners, we will make sure that that's spelled out here. So if you have any questions, we'll go back to that. So give us an example, other than our family, of without identifying anyone, of a family that came to you believing they wouldn't qualify, discovered there was help available, and it completely changed their ability to function and to survive financially as a family.
My favorite example is the family that came to me. Mom had been living in assisted living for years, completely qualified, not knowing it existed. And the child was borrowing money out of their own child's college fund to pay for mom's care. And they moved mom from one assisted living to another. And the savvy placement agent that was helping them said, "Did you check into aid and attendance?" and sent them over to me. When they found out that all of these years they could have been getting an extra $1,558 as it stands today, all those years they were flabbergasted and very excited to get the benefit, but wish they had known sooner.
And for some people, $1,500 when you're paying for assisted living or memory care or even in-home care is a huge amount. Having that extra $1,500 is a big difference.
It is, absolutely. That is huge.
And especially over time, you were calculating the other day on the phone, over 9 years, it was like 180 some $1,000 that someone missed out on because they didn't know.
Right,
Or
exactly.
because they didn't have you and they were so discouraged at the thought of the process that they just gave up before they even tried.
That's right. That's right. And one thing to keep in mind, the VA has really improved a great deal on their speed. Probably 2 years ago, it was taking about a year to get 9 months to a year. We are getting approvals literally every day in less than 30 days.
And it's great to know, and it's exciting, and it's wonderful. For some families, can make a huge difference. I mean, you must run into people every day who call you and say, "I had no idea."
Yeah.
That must
Absolutely.
be such
It's
a great
extremely,
feeling for you to know that you can make such a big difference for people.
yeah, it's very, very rewarding.
So one of the things that I know people ask, well, I don't have dad's records. I don't have what is referred to as a DD 214. Tell our viewers and our listeners briefly what that is. What if they don't have it? What can they do? Is there any alternative?
DD 214 is their discharge paper for military service. It shows when they serve so we can pinpoint those wartime dates. You can go to the the NPRC, it's called, the National Personnel Records Center, and get them for free by ordering them there. Usually takes about 3 to 4 weeks to get them. You can also, there's some expediting services out there, which you can pay a fee to, and they'll get them to you in a few days. So it's kind of up to you. And they're always welcome to call the VA or call my office if they'd like, and we'd be happy to guide them to getting those documents.
In where we live, you can go to the VA in Los Angeles.
Yes.
So we have one advantage, and I've done that for my clients from time to time. So if someone's not close to a VA building or facility, how is the easiest way and the fastest way to do it?
I usually, if they have the $80 for the expediting service, I would do it that way. If they don't, the National Personnel Records Center is very good now. They also have sped up quite a bit. I would just get it ordered from them, and you'll get an email with a copy of the certified discharge papers that we can use.
Really? So it's not one of these, oh, we'll see you a year from now kind of
No,
hopeless, lost in a black hole situation.
Right, exactly.
Well, that is certainly good to hear. That's good to hear. So if they can't find them, there is hope they can get them, and you'll help them with that.
That is correct, yes.
So if someone is listening today and their parent has already died, so they didn't start when the veteran was alive, can the surviving spouse can still have help,
Yes.
have hope?
Surviving spouse can absolutely get help, but there has to be one part of that marriage still alive to be able to make it happen. So, yeah.
And then that stops as soon as the surviving spouse is gone.
Correct, yes.
Okay, great. Sandy, I heard something once, and I mentioned this to you. I heard someone say once, oh, and the best thing is that these benefits are retroactive. So I'm thinking, okay, retroactive to when my dad passed away, which was 9 years ago. That's great news. But you explained to me that that's not what that means.
Right. It's only retroactive to the first day of the month after they receive an application or an intent to file. So if they don't get that, then we're kind of lost. So we have to.
The moral of the story is start soon.
Yes, absolutely. It's absolutely something that you want to do.
Let's switch over to Medicaid. You're in Arizona, where Medicaid actually, I think, is called Altix, ALTCS.
Yes.
But
Yes.
because we're talking to people who are in different states, and lots of people are going to listen to this, and because this is great information and you're such an expert. So let's talk about Medicaid and Altix. So no matter what state they're in. So in simple English, if there is simple English for this, what can Medicaid long-term care program potentially provide for someone who needs ongoing care?
So there's two options for Medicaid, and depending on the state you're in. In, for example, Florida, as an example, it's considered a waiver state. So they offer between $1,600 and $1,800 additional dollars per month to help pay for care in a community that is licensed with Medicaid. As far as Arizona goes, we're a little bit different. We pay the difference between your income and the cost of care. So if your income is $2,500 a month and your cost of care is $7,000 a month, it's actually a huge help. So
the state pays the whole amount?
Yes. Mm-hmm.
That is wonderful.
Yes. Yes.
But it has to be with a community that's approved for
that's
Altix?
Licensed with, yep, exactly. A community that is licensed with the state to provide Medicaid services. And Medicaid, much like VA, does look at care need and significant, depending on, like Arizona does have a very high requirement for care. Other states, it's a little bit less of a requirement. It just, you have to kind of look at each individual state. And then there are income considerations and also asset considerations for Medicaid.
So it seems that Medicaid, and I can only refer to it because I'm not in Arizona, but Medicaid is almost like the home of last resort. When you have no money left and you still need care and you have to be in a care community of some kind, assisted living, memory care, board and care, something, and you don't have any money, your only hope is Medicaid, and not every community accepts Medicaid, so
That's
you're
correct.
in a substandard community. Is that true? Is that pretty dismal?
It depends on the particular state. Arizona has some very, very lovely assisted livings that take Medicaid. So does Florida. Different states, not as much. You have to kind of look at each state individually. Some states don't offer hardly any Medicaid. For example, Kentucky, Alabama, they're much more difficult to get Medicaid in those states. Some states have long wait lists. Arizona does not have a wait list, so it just kind of depends. I don't think California has a wait list at this point, but they don't necessarily always have the best options either. And some states require you be in a full skilled nursing facility versus assisted living. So you have, each state is very different when it comes to Medicaid, since it is a state by state program.
So there really is nothing standard about it.
Not only the numbers overall, $2,000 in assets. If they're an income cap state, 2982 a month in income gross is all you can have, things like that. But in Medicaid, which is a much more complicated program than VA benefits, planning is even more important because you can do a lot with it. You just have to take the time to actually pursue planning and talk with someone in your particular situation in your state.
So it seems that because there is planning required and much more important on Medicaid, but people don't know. How would a person know what they should have done 4 or 5 years ago?
Get with a Medicaid planner that offers you a free consultation and get it all figured out 4 years ago and then wait. I do that quite a bit. I have a lot of clients that I meet with years before they're ever going to need benefits.
So a phrase that we hear often with Medicaid is spend down. But what you're saying is it's difficult to spend down when you need it.
It's difficult to spend down when you need it. It's also difficult to spend down when you don't know exactly what you're spending down with. You know what I mean? Where do you spend it? How do you spend it correctly? You can't just give it away because they don't allow gifting with Medicaid either. So you can't give your children money and then go apply for Medicaid without a penalty. So there's
Right.
a lot of things involved. It really is to the advantage of the family to do some planning.
And what happens in that case when a specific spouse needs care, but the other spouse is healthy and living at home?
It depends on if the state is a community property state and what the rules are. So again, it's very much state dependent. Arizona, we can shift assets to the well spouse and protect them. Not every state allows that.
All right. I can see that people need an expert, and you are that one. I can tell. Let's talk about the house, the asset everybody worries about. And the question we just talked about is, will we have to sell mom's house? How do you know that? And how do you know it when you're doing advanced planning, Sandy? How do you know what you're going to have to do with the house?
Well, we know that the house, while it is not countable when it's still a primary residence, we know it becomes countable if you sell it, you rent it. So in advanced planning, we want to make the decision, what are we going to do with the house? Are we going to put it in an irrevocable trust? Where do we want to go with the house, basically?
And then you help them decide what's the best thing to
Right,
do.
right. Usually what I say is if you can have anything that you want, what would you like to see happen with your parents' situation, aside from something that only God can do? And then we can work through those things and try to make it work for them to the best advantage of the family.
What do you wish real estate professionals understood before giving advice to their client to transfer or dispose of a property when long-term care may be involved?
I wish they understood that they need to refer them to a long-term care provider so that they can talk it through and a planner can work with them. It doesn't
Yeah.
mean they won't sell it. They probably will have to sell it, but let's at least set it up correctly.
Yes. We could have a whole nother session with you, and we hope that you'll come back. Let's just ask you a couple questions as we close today's episode of Always Ageless. You've sat across from a lot of families who are frightened, they're exhausted, they've watching their lifetime savings disappear or it's already gone. What have those families taught you?
That's a tough one. Compassion and the compassion that they have for their loved ones It's hard. It's a hard situation to be in when you care about your parent, you're trying to help them, but the money is not there, or you're fearful it won't be. And then a lot of, I would say 99% of the time, the last thing they say to me is, I am so thankful I called you, because at least now I have the facts instead of laying in bed at night worrying about what I don't know for sure.
Right. Yeah. I was in a community last week where a gentleman was moving his mom to another place because he couldn't afford to keep her in the assisted living because her care level had increased, and he
Yeah.
needed to put her in a board and care because they could get
Mhm.
more care for less money. And he looked at me and he said, Valerie, I'm just trying to do the best I can. And I said, we all are trying to do the best we can. And isn't that really the case?
It is. It is.
And do you think that because the demographic is changing, Sandy, and as so many of us are getting older, and those of us who are getting older are also living longer, and you've been in this now for a long time, do you see things changing?
I think that the benefit programs are getting more, well, no, I don't think I see them changing enough. Programs like this are probably the best blessing to families, because if you can catch it early enough and get some clarity on what you can do and know there are options out there, makes all the difference. So from that standpoint, that's my hope and my prayer, that we can get the word out. We don't take a course in high school on how to take care of our parents. Maybe we should. But barring that happening, we're going to have to start getting the word out and helping one another to understand what the options are.
Before we go, Sandy, first of all, thank you so much. We've extended our time and we appreciate you so much for being with us because this is so important. But tell people about your specific guarantee, how you work with your clients, how people can reach you.
So you can go to my website at ltainfo.com. You can call our main line, 877-286-0402. And my guarantee to my families is, I'm not going to take a case I can't win. I don't, I work by word of mouth, and I want people to talk about the great experience they had and know that we're not going to just take their money and on a wish and a prayer. We're going to make sure that they're qualified and that they're going to get those benefits, or we don't take the case.
So, to our viewers and our listeners, just imagine that you can make a phone call, which is a complimentary courtesy phone call, and have a guarantee like that. That if you don't know, Sandy's going to ask you some questions, as she did with our family, and tell us whether she thinks she can make it work or not. And if not, it costs you nothing. And where else can we go in today's world where we get those kind of guarantees and kindness and someone we can work with? Sandy, we hope that one of the biggest things that people take away from today's conversation is this: don't assume, number one, you don't qualify. Don't assume something like you have to spend everything you've earned in your lifetime. And don't wait until the family is in crisis to start asking questions. Even if they're not sick, even if they're not disabled, even if everything is fine, it's not too early to ask questions and have that phone call. And even if you think it's too late, it's not too late. Still call Sandy. Everybody's situation is different. She's heard almost all of it, although there's always something new, and she's there for you. Sandy Messer, thank you so much for joining me today, for helping families understand that when long term care becomes necessary, there may be more options than they realize, some of which we've learned on today's call. And to everyone listening, remember that growing older is inevitable. How we prepare for it, though, and how we fully continue to live is something that we can influence. So until next time, stay curious, stay connected, stay bold, and always stay ageless. Thank you, Sandy Messer, very, very much.
Thank you.